Hello, everyone. I'm Matt Clark, research analyst for moneyandmarkets.com with your marijuana market update. First off, let me take this time to really thank Matt Battiali and his team for all the hard work they put into getting the marijuana market update started. They did a fantastic job, and it's a real honor to be able to kind of carry it on from here. And I like to thank Matt for all of his hard work and his team as well. But without further ado, we're going to jump in, kind of keep these short. I don't want to make them too long, but we love your feedback. Anything that you have to say about this, any particular cannabis stocks you'd like us to look at, we'd love to hear that too. You can email us at feedback@moneyandmarkets.com, or you can leave a comment underneath this video here on our YouTube page. If you are new to the YouTube page, make sure you click the subscribe button down at the bottom, and make sure that way you can get alerts for all of our videos. We do we have our Bull and Bear podcast. We also have our week ahead that we produce, as well as this marijuana market update, and much more. So make sure you hit subscribe down there on the bottom, and that way you can get alerted. But without further ado, let's jump into this week's market update. We're going to kind of take our cues a little bit. I love getting feedback from people, whether you're asking a question, making a comment, anything like that. Love that. We actually had someone, CB, on our YouTube channel, actually posted a comment and asked if it'd be possible if we could look into Cresco Labs. And I thought, well, absolutely, without question, we can look at Cresco Labs. That is a strong cannabis company to look at. So what we'll do, the format I kind of like to follow is we'll talk a little bit about the company, what they do. Then we'll talk about their financials and how they're kind of structured. And then we'll get into more of the technicals and discuss, the possibilities of whether it's a potential investment, a buy and hold, or maybe you want to stay away from it altogether. And we'll get into that. We'll try to do that in a pretty compressed amount of time. But again, encourage you to, obviously leave feedback, email us any comments or questions you have, and subscribe to our YouTube channel anytime. That would be fantastic. So first off, let's get into Cresco Labs. And it's a company that's based out of Chicago, Illinois. It's a good sized company. It's got a market cap of about $1.2 billion. It's one of the largest multi-state cannabis operators in the U.S. It does have 18 of its own dispensaries that it operates in Illinois, Pennsylvania, Ohio, California, Nevada, Arizona, Massachusetts, and New York. It does have a total of about 350 products that it sells in more than 700 dispensaries across the country. So it doesn't just sell in its own dispensaries, it sells in third-party dispensaries as well. Some of its products include concentrates, live resins. They have their own Cresco and Reserve brands for that. They do have the Remedy brand, which is where they market soft gels, tinctures, and lotions. If you're looking for something that's more on the sweet side, you can look at the Mindy's brand for Cresco. That's where they have gummies, fruit chews, hard sweets, chocolates, things like that. They also do vape pens. They infuse cannabis into popcorn, which I thought was really fascinating. I had never heard of that before until I started doing research on Cresco, so I thought it was really neat. Shakes, pre-rolls, shorties are all also under their high supply brand. So they do have several brands that they sell products under. So it just varies based on what you're looking for. Another interesting part about the company that I thought was neat was that they actually have a national initiative, and they call it the Social Equality and Educational Development Initiative. And what it is it's supposed to be something that aims at giving people tools to work and operate businesses within the cannabis industry in the U.S. And it's it's supposed to be a very robust program that is pretty all-inclusive. I thought that was really kind of a neat aspect of the company. Now, looking inside the numbers, first let me stay by saying that cannabis companies across the country are struggling. There's obviously bigger ones that are doing better, smaller ones that aren't doing so well. And the cannabis market still quite a bit in flux, just because there's legalization questions, there's taxation issues, there's supply and demand. There's a lot of things that you might consider a headwind under normal circumstances with a normal equity, with a normal stock. Cannabis companies, however, have become pretty resilient. At least the really good ones have become pretty resilient at trying to deal with those headwinds. And Cresco is actually proven to be one of those that seems to do very well. They had their last quarterly earnings report at the end of May, and they showed record revenue of $66.4 million in Q1. That is a 60% growth over the previous quarter, and 26% growth on a pro forma basis from Q4 of 2019. They have the largest. They finished up their largest cultivation expansion in the company's history. 6 times the cultivation space in Illinois and 4 times the cultivation space in Pennsylvania. So they took their initial cultivation and they blew it up. They just massively expanded it. And I think that's because they realize what those markets are leading towards in terms of supply and demand. And we'll get into that in a little bit later. They had 144% year-over-year same-store sales increase from Q1 of 19 to Q1 of 2020, 87% sequential growth in retail value. In April, they had their largest ever share of the Illinois retail market, which the Illinois retail market is blowing up massively since that state legalized in January. And they've had 40% growth of their brands in quarter over quarter in California, another big market for them. So, and in that quarterly report, the company said that their plans for this year weren't necessarily to go gangbusters and to blow up more growth or to make this massive rapid expansion into other territories like Canada or in Europe or anything like that. What they want to do is kind of focus on what they're doing now and get better at it. And that was really encouraging for me to hear, because I hear a lot about companies across the spectrum that we want to grow, we want to get big fast, but they don't necessarily temper that. Because you can get too big too fast and, things don't follow in suit. If you do things steadily and you do things at a pace, then your bottom line tends to reflect that more positively. And I think that Cresco is trying to position themselves to do that. They want to focus on expansion in Illinois and Pennsylvania, which is what they're already doing. And they want to turn their California operations to be more profitable, which is great because California is one of their biggest markets. And you want your biggest market to be profitable because obviously it's a numbers game. Stock-wise, every cannabis stock is going to struggle. Either they have, or they're going to, or they still are in a process of struggling. There's just no way around that. The company's stock hit a low of around $2 a share back in March. It fell along with every other company on the stock market. It's around $6 today on Tuesday when I'm recording this. So that's a 192% increase in its share price in just 5 months. That's impressive, especially when you consider the type of market that we're in now. Obviously, the stock markets are all moving forward despite a recessionary economy. Remember, the stock market is not the economy. But there are some moves that should be fairly similar between the two. But 192% increase in share price is pretty impressive. And they've done that because they are not trying to just bazooka out growth. They're trying to just improve on, they have their base and they're trying to improve on that base and make it better. And the challenge here with any cannabis company is that most of them just don't make any money. They don't make any money because the costs are just not being offset by the sales. Sales are good. Sales are great in Illinois, in Pennsylvania, in California, in Nevada, anywhere where medical cannabis and even adult use cannabis is legal. Sales are great. Coronavirus has been a phenomenal boom to the cannabis industry. But still, it hasn't changed the fact that cultivation prices are still pretty high. And Cresco Labs really isn't any different in that respect. Their return on investment, their return on equity, and their return on assets are all in the red. But the bright spot here is that those returns are actually less negative than the industry average. So what I mean is that Cresco's return on assets and return on investment, for example, are less than negative 10%. The industry averages are more than negative 40%. So while they're in the red, I guess it's one of those things where you say it's bad, but it's not nearly as bad as everyone else. And that's okay. That's not a bad thing. It doesn't necessarily make it great, but it doesn't necessarily make it terrible and one you want to shy away from. Now, the next question becomes, what do we do with Cresco Labs? Is this a company that I want to buy? Is this a company that I want to stay away from? Is this a company that, what do I do with it? I'm a cannabis investor. Do I want to put my money in Cresco Labs? And, first I'll look at this a couple different ways. Money Market's chief investment strategist, Adam O'Dell, has this great proprietary stock rating system that basically ranks all stocks based on 6 factors. And that's momentum, size, volatility, value, quality, and growth. And what it does is it takes all 6,000+ stocks and spits out those rankings, gives everything a number. Everything is assigned a number from 0 to 100, 100 being great, 0 being very bad. And then those numbers then pool together and make an overall ranking. Right now, Cresco rates an 8 overall. Under normal circumstances, this would be a company that you would say, absolutely not. Stay away from. You don't want any part of it. The numbers are horrible. But I tend to think about it a little differently because I can't necessarily suggest that you look at cannabis stocks the same way you look at Amazon or the same way you look at Boeing or Ford or anything like that, because they're not the same. The markets are different. And so I want to I have to put a little thought into it. It can't just be technical analysis that I use to say whether this is great or not. Its sales are strong. It did rate a 47 in growth under Adam's system, which means only about 53% of the rest of the market are better. That's a great midway point to be, especially for a cannabis company. It's got a price to book ratio of 1.92. And that's pretty good compared to the industry average. It makes it a fairly good value in terms of its stock price. It's not a bad price to be at. It's not necessarily overvalued, and it's not undercut. But you have to understand, again, that most cannabis companies are going to be rate lower than against the rest of the market. That's just the nature of the game for right now. Until we see either a massive infusion of corporate dollars or, obviously federal legalization, that's just how it has to be. That's just the sector that they're in. Despite the amount of red that is in the ledger right now for Cresco, I still think there's a case to be made for Cresco Labs. I like that they're focusing on growth in states where cannabis is legal, where they have a good blueprint. Illinois, Pennsylvania being the two states, and then tossing California. I think those are three good target states for Cresco to look at, really targeting how to be profitable. And I think they're almost there. I mean, their return-ons, again, are not horrible. I mean, we're talking about, negative 9%, negative 5%, negative 15%. That's not bad, especially when you compare it to the rest of the industry. Under the assumption that there will not be federally legalized cannabis this year, Cresco's expansion plans are justified because they're based on where their sales are going to be the strongest, Illinois and Pennsylvania. And then, obviously you have California. Because Illinois sales are phenomenal. Pennsylvania, much better than expected. And California, there's a case to be made that there's still plenty of market share that Cresco can be gaining. The plan on how they're going to do that is a little hazy. I'm not really sure how they're going to do that, which makes me a little hesitant. But I think it could include expanding into different markets of the states, maximizing profits of the products they already have, maybe trying to decrease costs a little bit, streamline their operations, their cultivation operations a little bit. Doing things like that, I think, are where cannabis companies can start to realize growth. And I think Cresco is on the path to potentially doing that. It leaves, right now, if you look at their share price now, there's about a 34% growth potential in the share price where it is now before it hits its average that it has been. I can see the stock price testing $7 a share. That's about the midpoint of where Wall Street analysts have Cresco priced at. And that's, you take that for what you will. Every Wall Street analyst is different. Some have it priced as high as 11. Some have it as low as, $5. I think it tests 7. I think 7's a nice middle ground. If it can break through that, then I certainly think there's a case to be made that it could reach its 52-week high again, which was $9.60 a share. And I think that was back in September of last year, actually. That's not outside the realm of possibility. How long it takes for it to get there, I don't really know. I think there's going to be some ceilings, and Cresco is going to have to test those ceilings over and over again. So you're going to see up, and then a little bit of pair back, and then maybe a push through, and then a pair back, and then a push through, and then a pair back, and so on and so forth. I think that's where I can see it going. As for whether I think this is an investment opportunity for you, I think it is. I do. I think, ratings aside, everything else aside, the cannabis market aside, I like Cresco Labs. I like what they're doing. I like how they're doing it. I think they are setting themselves up for potential growth in the future. So I think it's worthwhile at an investment at $6 a share. I think you could see. I think we could realize 34% growth in the next 3 months, perhaps, depending on how things go. That could be even higher. But bear in mind, again, the cannabis market is very volatile. So if you get in now, don't be, misled if you start seeing a drop off, because these things happen. It happens all the time. The cannabis market is fluid. That's the way it is. So, but I think Cresco Labs is definitely a cannabis company worth your time to look at investing. So that's my take on it. Would love to hear from you. Feedback at moneyandmarkets.com. Would love to hear any type of feedback, comments, questions you have. Subscribe to our YouTube channel. If you have trouble, if you lost it, need to find it, Just go to youtube.com, type in Money in Markets, and leave us, subscribe. That way you get notified every time we have a video update, and we'll go from there. So until then, I'm Matt Clark with Money in Markets, research analyst for moneyinmarkets.com. Check us out on moneyinmarkets.com as well. But until next time, everyone, safe trading.